Imagine a business operating with almost no tax burden. Sounds a bit like a fantasy, doesn't it?
It really does.
But in the Philippines, for companies in certain designated areas, this is actually a very real advantage.
That's right.
Today, we're taking a deep dive into the tax world of Philippine special economic zones.
And to really get our heads around this, we're focusing on a key legal decision. It's from the Philippine Supreme Court.
Okay.
The case is Commissioner of Internal Revenue versus Seagate Technology, Philippines. It was decided back in February 2005.
Right, Seagate. And I gather this ruling touches on a whole bunch of Philippine laws.
Oh, absolutely. Presidential decrees, Republic Acts, executive orders.
Yeah.
The whole lot. They all play a part in understanding this specific case.
So our mission here is to figure out what the Supreme Court actually decided. And maybe more importantly, what does it tell us about tax exemptions, particularly value-added tax VAT for businesses set up in these special zones?
Exactly. It can seem pretty complex on the surface.
Yeah, definitely. So we're here to sort of unpack the key takeaways for you. Okay, let's get into it then. Where do we start with Seagate?
Well, let's set the scene. Seagate Technology, Philippines, was operating within the Special Economic Zone in Naga, Cebu.
Okay. In Cebu.
And crucially, they were registered with the Philippine Export Zone Authority, PIZA.
PIZA. That sounds important.
It's very important in this context. Seagate's main business, manufacturing recording components, and almost all of it was for export. Very little sold locally.
Right, primarily export focused. So this naturally led to questions about their value-added tax, their VAT returns, between 98 and 99.
Precisely. So in late 1999, Seagate puts in a claim for a pretty substantial VAT refund.
Okay.
But, well, the tax authorities, the Commissioner of Internal Revenue, didn't act on it.
Just sat on it.
Seems like it. So Seagate had to elevate the case to the Court of Tax Appeals, basically to make sure their claim didn't just expire because of the time limit.
Ah, the statute of limitations. So did Seagate have some luck initially in the lower courts?
They did, yes. The Court of Tax Appeals, the CTA, actually agreed Seagate was due a refund.
Okay.
The commissioner wasn't happy, obviously, and appealed that decision to the Court of Appeals, the CA.
And the Court of Appeals.
The CA also sided with Seagate, mostly. They upheld the tax court's decision, though they did trim the amount slightly, down to about 12.1 million pesos.
Still a significant amount.
Oh, definitely. And that specific figure represented the input VAT Seagate had paid on their capital goods, major equipment purchases.
So both the CTA and the CA agreed Seagate deserved money back, mainly for the VAT on their equipment. What was the core reasoning there?
Well, the CA looked at the incentives Seagate was using. They'd availed of fiscal incentives under Executive Order 226, the Omnibus Investment Code.
Right, the investment code.
Which gave them an income tax holiday, so no income tax for a while. But, and this is key, the CA said, look, being exempt from income tax doesn't automatically mean you're exempt from all taxes, like VAT.
That makes sense. One's a tax on profit, the other's on consumption. Different things.
Exactly. But then comes the interesting part for VAT. The CA recognized that since Seagate's sales were nearly all exports, those sales were considered zero-rated for VAT purposes.
Zero-rated. Okay, we should probably define that a bit more later.
We will. But essentially, it means their sales had a 0% VAT rate applied. Because of that, the CA ruled they were entitled to get back the VAT they'd paid when buying their machinery. That's the input VAT refund.
Ah, okay. So zero VAT going out on their exports, but they had paid VAT coming in on their inputs, their machinery. The refund balances that out.
You've got it. That was the logic.
Okay. So then the case goes up to the Supreme Court. What was their take? Did they look at it differently?
They definitely took a broader view, digging into the fundamental legal principles behind these special economic zones, the ecozones.
Right.
They started by emphasizing that the whole point of these zones, legally, is to offer preferential tax treatment. It's baked into the system through various laws.
So it's intentional.
It's very intentional. They cited several laws: Presidential Decree 66, EO 226, RA 7227, RA 7844, RA 7916, all pointing towards encouraging investment in these specific areas through tax benefits.
It sounds like a very clear, long-standing government policy then.
Absolutely. Then the court sort of went back to basics on VAT itself, reminding everyone it's a tax on consumption and how the system works with businesses offsetting the VAT. They collect the output tax against the VAT. They pay the input tax.
Right, the standard tax credit method, input minus output.
Exactly. And that led them to clarify a really crucial distinction: the difference between zero-rated and effectively zero-rated transactions.
Okay, what's the difference there? Because the CA mentioned zero rated.
Right. In both scenarios, the end customer doesn't pay VAT, and importantly, the seller can claim back the input VAT they paid.
Okay, same result for the buyer and seller's refund potential.
Yes. But the reason can differ. Zero-rated typically applies to exports, like Seagate sales. Effectively zero-rated often involves sales to specific entities, maybe government agencies or other exempt bodies, or transactions covered by special laws or international agreements.
So the why behind the zero VAT is different. Got it.
The court also drew a line between transactions that are just inherently VAT exempt, like, say, basic agricultural products, no matter who buys or sells them, versus specific parties or entities being exempt because of a particular law.
Ah, so exempt item versus exempt entity. That feels like it might be central here for Seagate.
It really is. The Supreme Court explained that Seagate's purchases, the machinery and supplies, weren't VAT exempt just because of what they were.
Right.
Instead, the zero rate applied because Seagate was located inside a PISA-managed ecozone. The law, specifically RA 7916, effectively treats these zones as separate customs territories.
Like foreign soil almost, for
Yeah.
tax purposes.
Exactly. It's a legal fiction, sometimes called the cross-border principle.
Yeah.
So selling goods from the regular Philippine customs territory into one of these PISA zones is treated, for VAT purposes, like an export.
Which means it's zero rated.
Correct. Which is why the supplier shouldn't really charge VAT, or if they do, the PISA-registered company like Seagate can claim it back.
Okay, that clarifies the mechanism. So why did the Supreme Court ultimately agree Seagate should get the refund? What was the clincher?
Well, they put huge emphasis on Republic Act 7916, the law governing these ecozones. It contains this incredibly broad statement.
Which is,
It says, quite plainly, no taxes, local and national, shall be imposed therein.
wow, no taxes. That's about as clear as it gets.
It really is. The court interpreted that to mean all taxes, direct ones like income tax, and indirect ones too, like VAT. Even if the VAT isn't directly on Seagate, if their suppliers pass it on, it becomes an indirect burden, which this law seems to prohibit.
So the no taxes shield is pretty comprehensive.
That was the court's reading. They looked at the history, the legislative intent across all those laws we mentioned earlier, and saw a consistent pattern: provide really strong tax incentives to pull investment into these zones.
It's a development strategy, essentially.
Absolutely. Boost exports, industrialize faster, create jobs, all driven by these tax breaks. The court acknowledged the general rule that tax refunds, because they're exemptions, are normally interpreted strictly against the taxpayer. You have to really prove you're entitled.
Right, the burden of proof is high.
But here, they said the law itself, RA 7921, was so explicit in granting the exemption that Seagate clearly qualified. The legal basis was just undeniable in their view.
So the usual strict interpretation rule was overridden by the very clear language of the specific law for ecozones.
Precisely. They also tackled that exempt entity versus exempt transaction point again, saying, okay, maybe the purchase itself isn't inherently exempt, but because Seagate, the entity, operates within this no taxes zone, the end result is the same. They shouldn't bear the VAT cost.
The entity's status confers the benefit.
Yes. And they even pointed to the Bureau of Internal Revenue's own rules, specifically Revenue Memorandum, Circular 7499, which basically said sales from the regular customs territory to PISA enterprises are treated as zero-rated exports.
So the tax authority's own regulations back this up.
It seemed to align perfectly with the court's interpretation of the law. The underlying policy reasons were also stressed: encouraging foreign commerce, strengthening exports, all that.
Makes sense. It's all part of a bigger economic picture.
And then there was a practical point about registration.
What was that?
The court clarified that simply being VAT registered is the key requirement for claiming these refunds. Seagate didn't need to apply for some separate status like effective zero rating. Just being registered was enough.
So the VAT registration itself is the gateway to claiming the refund in this specific ecozone context.
That's what the Supreme Court stated. They pushed back against the commissioner's argument that maybe Seagate's PISA registration meant they weren't subject to VAT at all. The court said, no, that's not quite right. The purchases are subject to VAT, technically, but at a zero rate.
Ah, a subtle but important difference. Subject to V, but the rate is zero.
Exactly. And because it's subject to VAT, even at 0%, any input VA paid in excess of that zero rate, like the VAT paid on the capital goods, is refundable.
Got it. So did the court find Seagate ticked all the boxes?
Yes, they confirmed Seagate met all the requirements. They were a VAD-registered entity. They had the invoices to prove the input taxes paid. Those taxes hadn't already been offset against any output tax since their output was zero rated. And crucially, the claim was filed on time,
Within the prescriptive period.
within the period. They also noted that Seagate had chosen the income tax holiday under EO 226. While that exempted them from income tax, it didn't automatically exempt them from VAT obligations. But again, because their transactions qualified for the zero rate due to the Pisa location, the VAT they had paid was refundable.
Okay, that paints a very clear picture. So if we boil this whole deep dive down, what's the absolute core message for listeners from the Seagate case?
I think the main takeaway is this. If you're a business operating inside one of these Philippine special economic zones, especially one managed by PISA, you likely have significant tax advantages,
Right.
particularly with VAT. While your purchases from suppliers in the regular Philippine territory are technically subject to V8, they should generally be zero rated.
Meaning you can often claim refunds for the VAT you pay, especially on big ticket items like equipment or machinery.
Exactly. That input VAT is recoverable, but you absolutely must follow the rules. Being VH registered is non-negotiable. Proper documentation is key. Filing on time is essential.
So the benefits are there, potentially huge benefits, but compliance is critical. You need to know the specific laws and regulations for your zone.
Absolutely. You can't just assume. And just out of curiosity, are these zones widespread? What kinds of industries tend to locate there?
Oh, yes. The Philippines has quite a few major economic zones. Think places like Cavite, Laguna, Batangas, Clark, Subic Bay.
Right, those big hubs.
And you find a real mix of industries. Lots of export manufacturing, electronics are huge, automotive parts too, but also IT, software development, business process outsourcing, even tourism in some zones. They're all drawn by these incentives we've been discussing.
It really shows how tax policy can directly shape where investment flows and what kind of industries grow.
It really does. This Seagate case is a fantastic illustration of that interplay between tax law and, well, national economic strategy. It makes you wonder, doesn't it? What other sectors could potentially benefit from similarly targeted incentives? Where else could this model be applied?
That's a great question. Definitely something to ponder. How these targeted incentives shape the broader economic landscape.
Absolutely. And if you listening found this interesting and want to go deeper, we'd really encourage you to look up the laws themselves. Republic Act 7916, the PISA law, and maybe Executive Order 226.
Yeah, and there might be other relevant Supreme Court cases dealing with PISA and VAT, too. It's a rich area if you're involved in business or tax in the Philippines.
Definitely worth exploring further.